Thanks, Kelly. That was a really great session there, guys. Thanks very much for that. That was really beneficial and really add value to our customers. Today, I'm joined by a fantastic panel from across the region to talk about digital affordability. When customers are in financial difficulty, has it been a revolution or is it more of a damp squid? You know, affordability and driving the right outcomes for customers has never been so front of mind for all lenders or all aspects of people who are working with customers in financial difficulty. You know, in the UK alone, it's estimated more than 80 million affordability assessments are completed each year. But actually, is the digital affordability the answer for better customer outcomes? And that's what we're going to discuss today. There's a whole myriad of different channels that we have to think about through, even when you're looking at digital communications with customers. You know, the old traditional methods of an INE and actually a phone call and a conversation really hits the mark with some customers where it doesn't with others. We have to understand the impacts of COVID. You know, huge demand and volume that has been come through to all the creditors is a significant impact to doing things differently. Or actually, how do you manage those customers when this volume has gone up so much to ensure that they have the right conversation and actually get to the right outcome? But then you've also got customer demand. You know, as the whole marketplace through anything that you do now is moving into digital, I'm sure every single person who's listening on this call has got a smartphone in front of them, and that smartphone can do a whole host of things for them, from everyday banking right through to all their shopping. And when you open a bank account with a fingerprint and a selfie, you know, things have changed dramatically in the marketplace. But some customers don't want that. Some customers actually do prefer a different channel, which is something that we have to be completely aware of. And then obviously from a lender's point of view, there's a huge operational expense that comes into making phone calls to ensure that the customer is getting the right outcome, when sometimes the calls can take up to 45 to 60 minutes. However, within that though, the clarification of the data can be key, and ensuring that customer relationship and that conversation is continued through the whole process, which is absolutely some needs from some customers actually have. So we need to find a balance. So today I'm joined by 4 people from across the business to really discuss this topic and really get underneath it to ensure that we can add value to you guys for listening to this topic. We've got Lucy from OpenWorks, Daniel from the Money and Pension Service, we've got Vanessa from Step Change, and Slav from Oodle Finance. And we're going to go through this today. I'm going to let the guys introduce themselves, and we'll do that first. Lucy.
Thanks, John. So yeah, I'm Lucy. I work for OpenWorks. I've been there for nearly 3 years now. So I'm the onboarding and customer success manager within OpenWorks. So what that means is I'm basically responsible for onboarding our clients onto our sort of products and services across the OpenWorks group, getting them live, and then sort of working with them on sort of the ongoing relationship, you know, looking at kind of our journey conversion for the customers that use the products, and the different use cases for those clients.
Brilliant. Thanks, Lucy. Over to you, Daniel.
Hi, I'm Daniel Kelly. I work for the Money and Pension Service, where I look after the standard financial statement, the industry standard for income and expenditures, affordability assessments. And I am also working on a project called the PACE pilot, where we're exploring utilising open banking in the pre-population of the SFS for the giving of debt advice.
Brilliant. Sounds really interesting, Daniel. Thank you. Vanessa?
Yeah, hi everyone. I'm Vanessa Northam. I'm head of strategic relationships at Step Change Debt Charity. So I joined Step Change in February this year, 6 weeks before pandemic kicked in. So it's my role at the charity to work with all the creditors across the financial services sector, including DCAs, debt purchasers, and all the major banks, obviously with the support of my team. Also working across the charity to really embed digital solutions and really increasing the propensity of our clients to use digital, and part of that in the future will include open banking.
Brilliant. And finally to yourself, Slav.
Hi, I'm Slav Losevs. I'm a head of product for operations and customer management at Oodle Car Finance, a hire purchase car finance provider Now, I lead our product teams that look after existing customers, so all the way from very standard, simple customer service queries to more complicated loan management and debt collection. And in sort of this year, in particular, a lot of focus on supporting our customers through the COVID crisis. And what we do in the product team is all the way from setting a sort of strategy and defining the customer journeys, but also building the tech solutions to support those.
Hey, thanks, Slav. That's great. And I'm sure you'll agree, guys, that what a fantastic diverse intelligence across our team with slightly different views across digital affordability as we go through each one. So this is going to be a really interesting conversation, I'm sure. Lucy, let me come to you first. What do you think's been the driving force behind this shift towards digital affordability? And where have you seen this really come to life from an OpenWorks perspective?
I mean, I think the shift towards digital affordability has come about because as a society and a generation globally, we've changed towards using things more digitally. As you mentioned, most people have a smartphone probably sat on the desk with them now as we attend the speaker session and attend the sessions going forward. So we expect products and services to be easily accessible at speed, online, available there. We want to pick up our phone or tablet and do something and interact. So kind of across the market, digital is at the forefront of innovation. I mean, according to research, people generally spend 3 hours, 15 minutes on their phones every day, and 79% of smartphone users have made at least one purchase in the last 6 months. You can only imagine that has sort of significantly increased during lockdown. So I think the shift towards digital within affordability is kind of inevitable, that we've started to see more innovation there because that's the way the trends are going sort of globally.
Yeah, that's really interesting, especially the screen time through COVID. I know for a fact mine's gone through the roof. How have you seen it, Daniel, from a money and pension services perspective? What have you seen it from like a government organisation? How is this impacting some of your customers?
Yeah, certainly. I think the impact of COVID is probably going to be quite a big factor for this, because obviously what we're seeing is probably the economic impact more likely to impact younger customers who are more likely to have that preference for digital channels. And so we could probably expect that this sort of digital preference is going to grow, and some people who have never been in financial difficulties before are going to find themselves in that process. And so we're more likely to see a growth in this sector. I think the only important thing to point out, though, is when it comes to the affordability assessment itself, this is still quite a sensitive topic for people. There's still this great fear of judgment in terms of you're going to be looking at all my expenditure and you're going to be saying what's right and wrong in it. And so that's going to drive customers either towards digital services because they don't want to speak to someone. They want to sort of do that anonymously with the robot as far as they're concerned. Or for some people, actually, the difficulty of it, the emotions behind it, they have a real need to feel like the organization they're engaging with is showing some empathy. And actually, they're going to want to engage through the telephone. And so even with a digital shift overall, that affordability step, we might see a mixed picture as to where people go, whether it's digital or through some of the other channels like web chat or telephone.
Absolutely, Daniel. I completely agree with that. When you think about customers, they're a whole diverse group, and sometimes they just won't want to do it through a digital channel. They really do want a phone call, which will make a massive difference for them, especially hearing that empathy and that recognition that there's something wrong and they're actually there to help. How have you seen this in step change, Vanessa? What do you think some of the driving forces behind the shift to digital have seen from your perspective?
Yeah, so I mean, I think the perception of step change is we're very much a telephony service, but actually we've been providing digital affordability since the late 2000s. So this year we went fully omni-channel. So wherever a client starts their journey, whether that's on the phone or online, if they choose to then move to a different channel, that their journey is being able to view exactly the same at where they finished. So what we've seen is the best journeys are have a bit of both. So what you tend to find is most people don't want to be going through an I&E and revealing all their financial ins and outs on a telephone. And I mean, obviously, a proportion of our clients definitely choose that channel. But what we're seeing is that a large proportion are really happy to complete it online. But when it comes to understanding the solutions and the options, that's where the telephony really comes into its own to provide that reassurance, the context for why those solutions are the right ones. So, I think there's absolutely a place for both, but I think most, I think what we're really now seeing is quite a different cohort of consumers are going to be coming through into collections processes and ultimately onto debt advice that have never been in this situation before, and their expectations are going to be quite different. So collections has very much been a telephony-bound, outbound and inbound process. But a lot of people are now saying, well, why can't I make an arrangement online? And we are seeing some innovation in that space from some of the banks. And, that expectation, I think, as a result of COVID, will bring in a lot of consumers who think, well, wait a minute, I can do everything from my smartphone. Why can't I make an arrangement to repay my arrears on a mortgage? Why can't I do that on a credit card? So yeah, I mean, it's we are seeing some great innovations in the sector that I think will really engage consumers like never before. So, rather than avoiding phone calls and texts and letters and ultimately a knock at the door, if I can just go onto my bank app, make an arrangement, less likely to get into further arrears. So yeah, there's a huge opportunity in this space.
It's an interesting point about the new cohort of customers coming through. I think that's going to impact everybody on the panel, especially these customers who don't know anything about collections, never been in this process before, and then fall through into this really looking for advice and some guidance. Slav, from your perspective, mate, what have you seen as the driving force behind the shift towards digital? How's this become apparent in your business?
Well, I guess we can't really ignore the elephant in the room of COVID and the massive impact it's had on customers. And I think there are two factors that's really made digital affordability stand out compared to kind of more traditional processes. First of all, just the volume of applications for support, but also the short period of time when it was all compressed into. John, you mentioned sort of 40, 60-minute traditional phone call. If that's the only tool in your toolkit, and you have to speak to a whole bunch of customers in sort of 2-3 week period of time in late March or early April or during the summer, it's just not operationally feasible to do that. And that's where digital channels have become really attractive. The other factor is that the COVID crisis has impacted customers in very, very different ways. Some have completely lost income. Others had a very small change, but small but noticeable change to their income. Others have actually have more savings than they had before. So the accuracy of the I&E, I think, is more important than ever, given these very different circumstances that customers find themselves in. And that's where use of open banking and use of kind of factual data to start the budget building process is particularly important.
Brilliant point, that, Slav. Absolutely brilliant point. And it's almost like you set me up for the next question, mate. And when you really think about digital affordability and the benefits of those, do we think there are some strong benefits for actual customers in financial difficulty? What do you think, Lucy?
Yeah, I mean, as we've touched on, kind of you can do everything online now. And then sort of typically you get into the collection space and it does become a manual process or a telephone call. And as people shift to digital, they expect to be able to do that in a digital manner. I think as we start to see, more people, as Slav just mentioned, kind of going into this space who haven't been, in collections before, they haven't been in arrears before, there's now suddenly much larger volumes of people that need that support. And I think with having a digital channel available, it gives people an option just to, even if it's do a bit of investigation, see what's out there, try and build a picture of their finances online without needing to pick up the phone, which for some people can be really scary to go, actually, I'm going to sit here and I'm going to tell you what's going on in my bank account or in my personal life. You know, we have the kind of response bias where we might be talking to someone on the phone and they're asking us certain questions and we give them the answer we think we want them to hear because we're scared about being judged, or, you know, we're worried about, God, what did you say? You spent how much in Topshop? Like, you know, that sort of thing. You know, people can not give you the correct answer, not because they don't want to, but because they don't want to be judged. So I think, you know, as we've said, there's always going to be a proportion of people who want to have that phone call and they want to have that conversation with someone and they want to be able to say, you know, this isn't normally me. This has happened because of a certain change. There's always going to be those sorts of people. But if we can offer, you know, a digital route for the customers that want digital, hopefully as well, we can take some of that strain away from the contact centres where people do actually want to call in and they do actually want to have that conversation. The other thing is, you know, people are busy, even though there's lockdown going on. You know, you've got children, you might have people to care for. There's a lot going on still in the world, and to be able to find time to sit and have, you know, a 45-minute conversation with someone, you know, can take a chunk out of your day. Whereas if you can sit, you know, on your phone and kind of go through a journey when it suits you, to some people that's, you know, a really attractive proposition.
Yeah, I see your point. Daniel, what do you think? Do you think there's strong benefits for the digital affordability within your part of the business?
Yeah, certainly. And obviously, you know, as we've described, if customers are desiring a digital option, then if we do fail to fulfill that, we fail to fulfill that service space, then it's more likely that other actors that perhaps who don't have the customer's best interests at heart are go replace it. And we want to see the free debt advice sector really fulfill its role to customers in financial difficulties in that space. And I guess the only thing around the digital journey around this is we need to be clear that when we're looking at affordability, what we're trying to do is help the customer come to a sustainable, future-looking position of what their circumstances are going to be moving forward. And especially when we look at open banking, that can only give us historical data. It can only give us what the customer was doing, and their circumstances may have changed. Their circumstances, they may want to change. And actually, you know, as debt advisors, we're used to going through these sort of coaching conversations with customers of trying to help them decide, okay, you've really been cutting back on food to a really excessive level in order to maintain payments to your creditors. You know, do you want to have a healthier lifestyle in that area? Do you want to increase your expenditure? Or this area of expenditure seems incredibly high. Do you want to cut that back so that you can take care of your debts more quickly? We're used to having those coaching conversations. To translate that into a digital process is tricky. And I think it will take time for us to really master that and to be able to deal with sometimes the complex and you know, very different circumstances that customers can be in. So I do think there are benefits, but I do think we just need to bear in mind that that forward-looking picture is different from just having this accurate historical picture. But the more accurate historical picture we have means that when those customers are putting in those changes, we're more conscious of what those changes are. The customer has decided to change their circumstances, and therefore we might see some behavioural shifts as well, as they're more conscious of those changes and therefore more likely to then carry them through in the process. So there's a lot of different dynamics there.
Yeah, I love that point, Daniel. I really do. The sustainable future-looking positions, because, you know, I've just scribbled down here that you've got the market demanding. You know, every one of the major adverts on TVs compare the market, money supermarkets, where you can look at your Sky, your telco, utility, and even some of your food shopping, where you can always get a better price. So the market's demanding that. So the customer could dramatically change what their expenditure is going to be, and that would be really difficult to pick up without a conversation. But Vanessa, from a step change perspective, where do you see some of the benefits for digital affordability?
Yeah, so I think Daniel's made a really, really good point about sort of the historic view of open banking data, particularly I think for people whose has been impacted by COVID. So, you know, 3 months ago they were earning, you know, their salary, and now all of a sudden they find themselves on universal credit. That look back is a bit of a challenge, because obviously going forward that income isn't there. But obviously what we know from an open banking perspective is, you know, that there are not hidden spending, but actually a lot of consumers, you know, do they really know what they are spending? So, you know, we talk about roundup bias, and just forgetting, you know. So if you say to somebody, you know, how much do you spend on your weekly shop, you know, your sort of mind almost goes to the big shop, doesn't it? So, oh, well, Lidl, Aldi, wherever, Tesco, it's about £70. But actually there's all the other additional shops, you know, that picking up the papers on a Sunday and getting a few things from the co-op. And when you add it all up, obviously that's where open banking really does add a huge amount of value, because obviously it's got that sort of merchant level of detail. So I do think that open banking can provide you know, the level of detail that sometimes as humans, you know, we forget. You know, we forget how much we spent last month on clothes shopping or other sort of supplementaries. But I think what open banking in conjunction with a good digital journey and even sort of support is to do the validation. So we know that open banking on its own isn't enough, particularly when you're looking at the standard financial statements. You know, there are certain categorization of data that needs that human validation. So I think there's a strong place to play for consumers who are totally digitally savvy, are aware, have an awareness of open banking and are comfortable using it. I think longer term it'll play an even greater role, but I think we're still not quite, I don't think open banking has still quite reached that tipping point yet. I don't think there's enough adoption out there to really get people going, oh, this is brilliant, I'm going to use this, and get it into the sort of the you know, the comfort of mass adoption. I think it's coming, and I think COVID can actually help that, because there's got to be so many affordability assessments done that actually open banking can help. So, you know, COVID could help with that adoption, I think.
Yeah, and really drive and funnel people into it. Yeah, I see what you mean. Slav, what do you think about the customers and how digital affordability will bring benefit to those guys?
Well, our overall mission as a company is to serve real people in the real world, and I think we apply the same lens to the digital affordability. So, you know, real people, everyday people, they're not finance expert. They don't want or need to be finance experts. So we need to give them tools in this sort of debt collection space that are easy to use, that work around their circumstances. They can do them at any time, day and night, that works for them. And clearly, kind of open banking driven digital affordability solutions are sort of one of those tools. You know, for full transparency, we work closely with Lucy, and we use the OpenWorks solution called Tully. And I think what I love about it is it looks at your open banking, but then it asks you questions to double check if you've forgotten something. If none of your transactions are tagged as council tax or insurance, it sort of double checks, is that really right? Or is something forgotten? And then, you know, the other sort of important element is that in the real world, typically we do 5-year agreements. Any customer can suffer an income and expenditure shock, and we need to have ability as a lender to support them through those difficult circumstances. So if we get the as accurate information as possible, we can really provide tailored solutions for that specific customer that work for them. But also at the same time, by using kind of digital rules and processes, we can deliver consistent outcomes. So customer A and customer B are both treated in a fair way and both go through the same framework. And it's, I think, easier for us to deliver than if we're relying on a large number of kind of operational call center agents to follow a decision matrix.
Yeah, absolutely. I understand that one really clearly. It's a good point, that, Slav. So just to finally finish the panel, guys, I've got a last question for you, really. And if we can just focus on, do you actually think digital affordability revolutionise how financial difficulty is assessed? And if we can just keep the answers quite shorter, because we've only got around 5 minutes left, that would be fantastic. Lucy, what do you think?
Yeah, I mean, given I work for OpenWorks, my straight answer is going to be yes. We think that it really can, revolutionise kind of how people, engage with digital affordability things. As everyone's pointed out, to Vanessa's point, having that open data, the credit reference agency data, open banking, Cato information is great, and it's a really good base to start with. But we're always going to need the kind of the first party data as well. So that conversational intelligence, confirming with the customer, is this right? Does this look like you? Is this an accurate picture of your income now, given, people might have gone on furlough? So I think, it's great having all of that data available. You still need that context from the customer. And I still think, to the point of education, there's still a lot of education that needs to be done in the markets around open banking and what it is, and is it trusted, and it's safe and everything like that. So to round up quickly, I think it can definitely support customers who want access to digital products. There's still work to do around kind of open banking and the whole digital space.
Brilliant. I saw you nodding along there, Daniel. Do you agree with what Lucy just said?
I do agree with what Lucy just said. And I do think, obviously we've talked here about some of the improvements that could be made within the current process of you do that income and expenditure affordability check up front, and that's it. And actually where I do think there's perhaps an opportunity to really change and I guess revolutionise sort of affordability assessment is we need to bear in mind that people's income nowadays is far more likely to be volatile than perhaps in the past. And obviously expenditure as always just sort of comes in waves and goes up and down each month. And I do think that's something which we've never really been able to solve in the past. You do the affordability assessment, and at best, in the debt advice sector, we tend to do annual reviews. And that's where you'll sort of pick up how successful that financial statement was, and even then in vague terms. If we are able to use that data and use it continuously throughout the journey, we might be able to better control and understand how that customer is dealing with that affordability assessment. How accurate was it? How sustainable is it? And when do we need to change? And I think that could be a really big improvement to help us cope with increasing volatility and support customers better in future. And that would, I think, be more revolutionary rather than just an improvement on our existing processes.
Yeah, good shout, mate. We've got a couple of minutes left. Vanessa, Slav, I'll come to you quickly. What about you guys? Do you think this will revolutionise the business?
So I think it'll certainly improve and engagement in the process, and I think that is the key to the revolution. Because actually, I think what the revolution is much earlier awareness of financial difficulty. So, if you think that sort of one of the barriers to really getting or avoiding a financial crisis is getting into collections, completing I&Es. So I think actually that is the revolution, that actually earlier intervention, consumers not burying their head in the sands because it's all too difficult. I think that is where we need to get to. And in the same way that, people are sort of focused on other areas of their lives through apps, I think this is the revolution. So understanding where the money's going, and if they do get into a situation where their income has significantly reduced, the accessibility to get support, that's the revolution, because then we can prevent people getting into debt crisis. And actually the solutions that are available to them earlier are far more supportive, and they can get back on their feet far more quickly with less detrimental impact to their credit files in the longer term. So that's where I think the revolution and the key is.
Okay, brilliant. And Slav, over to you, mate, just to finish this off.
I think it's already been revolutionary, or a little bit revolutionary, as I said. We're now in a second lockdown, and at Oodlecar Finance, we have customers applying for financial support because of lockdown on a Sunday evening, and getting an instant decision in many cases with the support that they need. And then those with the more complicated financial positions, they can be prioritized to be reviewed by our more experienced agents. But that journey, customer journey, would not have been possible without open banking and without digital affordability solutions.
Sounds like you're doing some great work there, Slav. So that'd be really interesting to hear more about at a later date. So thanks for that panel discussion today, guys. I've got a lot of value out of it myself. I hope everybody listening has gained some great valuable insights. Some of the key messages that I've been scribbling down here, I've seen that we need to ensure that we've still got the balance between having that empathy and conversation with the customer alongside the open banking tools that we've got to really gain the multitude of channels to ensure that all our customers can be treated to deliver the right outcomes with the right information. It's been interesting, some of the new cohorts that you've seen coming through with this new blend of customers that we're seeing through COVID, which is a really interesting perspective considering some of these customers may never even had a collections letter before. And actually, they're actually really in severe financial stress because they've never even come across this situation. And that's going to be a really interesting blend over the next few months and into the next few years, probably, when these customers are still filtering through. And then also understanding from a sustainability point of view, that understanding of the future transactions and really building out that new pattern of the future to understand what that spending is going to be. But the great positive message is we're seeing a real increase in open banking utilization across collections and really understanding these customers' positions, financial positions, to really make smarter decisions. And that can only help one person. And that is actually the customer at the end of the line who needs that conversation and who really needs that support. So that, I'm sure we'll all agree, is a fantastic outcome. Thanks for joining me today. I hope you have a great day and understand everything else we've got going on across the expo. I'm really looking forward to any insight and feedback that we get. Thanks very much, guys.